a form of higher volatility than Bitcoin itself. But if you know Bitcoin, you understand that volatility is vitality and volatility is also opportunity.
Investors see this erosion clearly. They look at their options for preserving wealth, and increasingly, they see Bitcoin as the answer. Bitcoin offers something fiat cannot: a fixed supply of 21 million units, backed by the most decentralized, secure network on Earth, powered by real-world energy. But here's the catch: not all capital can flow directly into Bitcoin itself. About 90% of global capital is locked into securities markets, equities, bonds, and structured products. And that's where Bitcoin Treasury companies come in. They serve as bridges, securitizing Bitcoin into forms that are accessible to institutional investors, traditional brokerage accounts, and credit markets.
So I would say in terms of what investors are expecting, they are expecting a management of risk as well, and a perspective on the long-term perspective of Bitcoin Treasury companies. And I would like to say first that the riskiest option for investors is to not get enough Bitcoin exposure. The riskiest option and the risk that investors look at is how to get rid of fiat that is getting completely debased. And then they look at different options that they have to do so. And they have Bitcoin itself for a very specific portion of investors because it's a commodity. And 90% of capital in the world is going to be allocated to securities. And the goal of a Bitcoin treasury company is to securitize Bitcoin and to provide a form of Bitcoin exposure that is accessible into traditional brokerage accounts and for credit markets and for traditional institutions that are looking for equity. And so then the risk of Bitcoin treasury company is to have, of course, a form of higher volatility than Bitcoin itself. But if you know Bitcoin, you understand that volatility is vitality and volatility is also opportunity. And so if a Bitcoin treasury company is more volatile than Bitcoin, but is purely based on Bitcoin and Bitcoin accumulation, and it's forming a Bitcoin accumulation machine on capital markets, then yes, there might be more downside risk as an investor, but yes, there can also be more upside potential if you have a sufficiently long time horizon. And I think that both Smarter Web and Capital B, we are providing this type of options to investors with different type of risk appetite and different type of financial instruments that can provide access to Bitcoin in a way that can outperform Bitcoin over time with more volatility in the short term.
Traditionally, companies are judged by their profit and loss statements. A strong P&L reflects healthy operations, revenue growth, and profitability. But Laizet flips this script. In the age of Bitcoin, he says, the balance sheet becomes the new P&L. Why? Because the act of accumulating Bitcoin on the balance sheet is itself the act of making money. The metric for success is not net income in fiat terms, but BTC yield. How many additional Bitcoins have been acquired, net of dilution? That is the true wealth creation engine for these companies.
I would say that you can put 3 filters to separate the noise from the signal. And the first one, as Jesse mentioned, is this company focused on Bitcoin? Because Bitcoin is the only asset on Earth that has absolute scarcity, that is protected by the most decentralized and secure network in the world, bounded by real-world energy, the equivalent of 21 nuclear reactors around the world, protecting the value of your time and work over time and space. That's quite unique, and it's the first time in humanity that you have this unique information that this asset is working for you over time. And this network is powering you, your family, your corporation, your institution. And so if you are focusing on any other asset than Bitcoin for your treasury, then your company is going to zero. And it's going to zero against Bitcoin, and you are not going to be able to keep up against the other companies that have realized that they need Bitcoin on the balance sheet. It's like having a competition between the dollar and the Zimbabwe dollar. Well, you would want to, if you had the option between those two currencies, you would put everything on the dollar. But now you have the option with Bitcoin, and Bitcoin has a fixed supply, while the dollar has an unlimited supply. So where do you want to store your energy? Where do you want to store the value of your treasury? You want to store it in Bitcoin. So if you have not a focus on Bitcoin as a treasury, you are going to lose, and you are going to do a disservice to your shareholder base. So anything other than Bitcoin, any type of diversification is losing value against a Bitcoin treasury company. The second filter is the focus on the long-term accumulation of Bitcoin, and specifically all in on the long-term accumulation of Bitcoin. Is the company fully committed on a Bitcoin standard to putting all of its long-term capital to Bitcoin on its balance sheet? That's the case for Smarter Web, that's the case for Capital B. That is the playbook of strategy that has initiated the playbook, and MetaPlanet, of course, and we have continued this with Capital B and Smarter Web. And I would say that this is the second principle, and it's extremely important because it guides from an ethical perspective what will be the role of the Bitcoin treasury company in capital markets. Because when you raise capital, you need to be a Bitcoin maximalist to negotiate terms with financial institutions that protect your retail investment base and that are extremely accretive over time, not to make a quick buck, not to make a quick pump and dump scheme and then lose the capital over time of your shareholder base. So I think that's an extremely important component. And the third filter is whether or not the company is completely committed to have a Bitcoin treasury company strategy like MetaPlanet, Capital B, Smarter Web, by being completely focused on maximizing the number of Bitcoin per share. And if you own a business and this business is not increasing the number of Bitcoin per share over time, this business is going to zero against the business that is maximizing the number of Bitcoin per share over time. That is my only role in the company. It is to raise capital, to maximize the number of Bitcoin per share by accumulating Bitcoin in a consistent manner, and to do the capital raise in an accretive way that is at premiums to the Bitcoin we have on the balance sheet, to be able to maximize that potential return over time for investors that believe in Bitcoin. And if you apply those three filters, you really end up with a hand of companies in the world today. And that provides a lot of clarity and a lot of peace of mind. And at the end of the day, when we talk to major investors, what we are able to do as a completely focused Bitcoin treasury company is to provide peace of mind for investors that know that they have a team that is dedicated to buying more Bitcoin for them over time, and that is extremely powerful to take advantage of capital market, the elasticity of capital market, to acquire the most inelastic asset on earth, which is Bitcoin.
Today, Bitcoin treasury companies are doing something strikingly similar. They issue securities in capital markets, raise capital from investors, and convert that into Bitcoin. They are, in effect, central banks of their own securities, and instead of gold, they are stacking Bitcoin, the hardest, most scarce, most secure monetary asset in human history. This parallel is not theoretical. Laizet himself, through companies like Capital B and Smarter Web, is executing exactly this playbook. Supported by experienced financial engineers, major investors, and Bitcoin pioneers, these firms aim to build balance sheets that dominate their regions and sectors.
What is the best form of money? It's Bitcoin. And what is a Bitcoin treasury company doing? It's making more Bitcoin. So the business of a Bitcoin treasury company is the business of making money. And the best way to make money and to make Bitcoin is literally today to acquire Bitcoin through the capital markets. And so in some ways, during decades, the best way to make money was through a P&L. And today, the balance sheet is the way to make the most money, and the balance sheet is in some way becoming a P&L. It's just that when the business makes money and acquire Bitcoin, accumulates Bitcoin, it's not fitting that well into the traditional markets and the traditional reporting, but that's why we have new metrics for investors to analyze that way that Bitcoin Treasury companies are making more Bitcoin, and that is called BTC yield, that is called BTC gain. And BTC gain is just how much Bitcoin have you added to your balance sheet adjusted for dilution. That's literally making money. You are strengthening your balance sheet, and that's the end game for any company. So what is the mean doesn't matter as much as what is the end. And if the end is that you become the company that has the most Bitcoin on your region, and you have a dominance on the issuance of securities that allow you to grow your Bitcoin balance sheet better than other companies, then that's what you should do as a rational player in the market. And look, if Microsoft goes in and buys Bitcoin, that's good for us, because we would have been the first together with Smarter Web and the others to acquire Bitcoin, and they would literally increase potentially the Bitcoin price in fiat. So traditional investors would value the companies that are doing it the best, because it's not only about the size of the balance sheet, it's about the execution, as Jesse mentioned. We are a team of financial engineers in Bitcoin capital markets. We have a shareholder base composed of Adam Back, the only person mentioned in the Bitcoin white paper, and a major financial engineer as well. We have Fulgro Ventures, GTXO Management, Tobam, a major asset manager. And our board is composed of coupled 60 years of capital market experience, banking experience, Bitcoin experience. And in that way, well, you create the best conditions to increase your Bitcoin balance sheet. And that's how you make money. That is the business model. And that is literally the business model of a central bank, is to issue securities and build a major balance sheet. And that's what the Bank of France and the Bank of England have done with gold during centuries, and that's what we are doing. And we are literally the central bank of our own security, that we have the monopoly to issue on our own capital markets, and we have the capacity with Smarter Web to accrue billions and billions of dollars of value of Bitcoin. And at some point, the value of dollars will not matter anymore, and what will matter is the number of Bitcoin on our balance sheet. For us, it's already the case, but there are hundreds of trillions of units of capitals in the world, and those are going to be transferred to Bitcoin, and the Bitcoin Treasury companies will be the ones that will then partner with P&L, BTC generating companies that will want to have access to the securities of the Bitcoin Treasury companies to get an outsized performance for their own P&L. And so the balance sheet is the P&L actually for a Bitcoin Treasury company.
Eventually, the ultimate measure will not be fiat profits, but Bitcoin dominance. The companies with the most Bitcoin per share will rise to the top, outperforming those that hesitate or diversify into weaker assets. In this sense, Bitcoin Treasury companies are not just a financial innovation. They are the natural evolution of capital markets in a Bitcoin world.